Alright, hello, welcome to Camel Finance. I'm your boy Camel. And at first, the Fed tried to tell us that inflation was transitory and it hit a 40-year high. Then the Fed tried to tell us that we wouldn't have a recession. Now we're in one. Next, the Fed will try to tell us that the recession is transitory. You are now witnessing a historic Fed failure. And that's absolutely right. We are living through one of the most historical times in finance. And we have a front row seat to witness the Fed, the Central Bank of America, failing. Meanwhile, Bitcoin is quickly and quietly almost 50% off of its yearly low. You can call it as it is, but that's a long time to be on the wrong side of the trade, having kept a bearish bias. Just as wrong as holding a bullish bias from 69k down to 35. Stay on the right side of the market without bias. Fear and greed nudging up, getting much more towards neutral territory now. And Lightning is continue to thrive with 5-year-olds paying for ice cream using Bitcoin. As quickly and as simply and as easily as that. At the same time, the number of Bitcoin addresses holding 0.1 Bitcoin has just hit a new all-time high of over 3.7 million. So get yours before it's too late. Bitcoin and the S&P. A V-shaped bounce in the S&P 500 and Bitcoin to follow. So I think it's a little bit premature to be calling a V-shaped bounce. I know this would be really nice, wouldn't it, if we just had this same sort of V-shaped recovery and then a ripping rally to new highs. But I think it is a little bit premature to call this, to be honest. Open to seeing that, of course. Hoping to seeing that too. But for now, we remain flexible and unbiased. However, once the widespread pessimism and historical levels of cash on the sidelines have started to turn around, it's going to create one of the biggest rallies in history. Investor psychology can have a massive impact on the stock market, and at the moment the majority of people are still bullish. So if price continues to squeeze to the upside, those bears can only stay bearish for so long, right, before they are forced to come in and chase this rally higher. The banking giant Fidelity says Bitcoin is the only crypto it plans to offer in its 401k products. So it's interesting that they didn't include Ethereum or anything else in there. If you haven't seen yesterday's video on Ethereum, then I'd highly recommend you go and watch that. The White House has just created a cryptocurrency specialist position following its new bill. So read into that what you will. I'm not sure what I make of that. I guess crypto's not going anywhere, right? So they just need to have more specialist positions. As adoption continues, they'll want more and more eyes on the space. Speaking of America, the President, Biden, has tested positive again. So I don't know what to make of this either. But my thesis or theory on this is that they're going to swap Biden soon enough, and they're probably going to swap him with Kamala Harris. So we will see about that, see if I'm right about that prediction. Israel is tightening their ban on physical cash above certain thresholds, and this includes between private citizens. What's craziest about this is they are fining people like 10 to 30% for violating this. So that's quite severe, isn't it? Argentina is collapsing again. People are refusing to work as the government runs out of money and cuts subsidiary programs for food and fuel. So 43% of unemployment. Inflation is over 60%. Half of the country doesn't even want a job, and the other ones that do don't want to pay the taxes for the others. And of course, this is the problem. When you get inflation at a certain rate, would you work 40 hours a week for your salary if it only just put 2 loaves of bread and a pint of milk on the table? You're not going to work 40 hours at your 9 to 5, are you? If you can't even afford to pay the rent with that salary, why would you? You would just say, well, no, I can't. I'm broke anyway. I might as well not work at all, right? Might as well enjoy the last days on earth. So this is one of the big problems when inflation starts to get so out of control. Unfortunately, this is becoming a recurring theme, isn't it? That we keep seeing the collapse worldwide, and unfortunately, I have even more of this to show you. Protests have erupted in Bangladesh over power cuts and rising fuel and electricity costs. Police killed a protester and injured 40. The harsh police response has triggered further protests. And you can see that this is no joke. So the mess apparently is only getting worse and is acting like a contagion that's spreading worldwide. Saudi Arabia's economy expanded 11.8% in the second quarter, maintaining the fastest pace of growth since 2011, and it's been buoyed by higher oil prices and production as per a Bloomberg report. I also have a video recently about Saudi wealth flowing into Bitcoin, so go back and watch that if you're interested. Expectations for risk have come down lately. The VIX futures curve today versus a month ago shows you that we are significantly below this, okay? So the blue being today versus the black being 1 month ago. Overall volatility expectations have reduced in the past month, but short-term levels are still elevated. Such an environment has historically seen the S&P 500 outperform Bitcoin. So does that mean we are going to see short-term outperformance in the equities versus Bitcoin? I don't know, that remains to be seen. One thing that's undeniable is the Dixie has broken its parabola, and there's only one way a broken parabola ends, according to Game of Trades anyway. Now, I still think, as I've been saying over and over again, that a lower high, a bounce out of some level, I don't know where that would come. Could come anywhere, right? It could literally come here and it could come all the way down here, but I still think a bounce followed by an attempt to make a new high that fails and forms a lower high would be the more typical way to see something like this break down. So I'm still open to some level of bounce and a lower high before we can truly call a breakdown, but I wouldn't be totally surprised to just see this trend down in almost a straight line, given the state of the dollar and the US economy. And of course, as I mentioned at the start of the video, we are witnessing in real time the failure of the Fed, the Central Bank of America. We know that they are somewhat backed into a corner and are likely going to be forced to pivot over the next couple of months, potentially as early as the next Fed meeting mid-September. So there's a very good chance, in my opinion, that the high is now in for the dollar. But like I said, we still do need to be open, in my opinion, to seeing some level of bounce and a lower high form before we can confirm the breakdown. If we look at this, about those loosening financial conditions, okay? So the 10-year yield and the mortgage rates are dropping, as you can see. And it seems like home prices might not crash if mortgage rates are coming down so hard. And I did actually make a video towards the beginning of this year to say that I anticipated house prices to cool off, but not to see a full housing market crash. So I'll put a link in the at the end of this video if you want to go and see that. Got a nice thread here from Raoul Paul saying that most people who have crypto investment mandate are not fully allocated to crypto, as they have moved to park cash during this volatility. Hedge funds are underweight, retail is underweight, and the same with institutions and family offices. The general feeling is that the macro is so bad there needs to be a new low or a retest of that low. But my hunch is that the path of max pain is higher, and this is also what I've been saying, isn't it? That whilst I'm open to a rollover and a new low or a retest, that what's to say we can't just do this, right? Hedge funds are scrambling to buy calls just in case ETH breaks above 1800 to 2000. They cannot afford to not participate. And again, if you've been watching the channel, you'll know my target short term is 2200 for my Ethereum long. Above this level, retail will start to be forced in, along with institutions. 2200 to 2300 is a key one for RAL. A break of that either happens pre-merge or post-merge. Once everyone has got back in, the market can correct sharply before rising again based on the macro. It's funny, isn't it, the way that markets will wait for everyone to be back in before they correct. The macro is key here. Global M2 is the big macro driver for the crypto and liquidity cycle. And I have shown this chart before in a little rant I did, where I was saying that people that say Bitcoin is not really an inflation hedge just don't understand the movement of M2, the deviation from trend, which is in the white, versus the total crypto market cap. And Raoul says it is about to turn. The inverted ISM leads it. He says he thinks crypto is sniffing out the turn. And so you can see here in white, the ISM has inverted, has started to lead. So therefore, global M2 deviation from trend is likely to follow. And of course, as the global M2 deviates from its trend, we know that historically, the crypto market cap will follow it. The same is true of inflation, the other boogeyman. ETH is starting to price in the turn in inflation, which he thinks is correct. So you can see this here. ETH is sort of front running this peak in inflation. But he can't help but mull over the long-term chart of Bitcoin versus the second best performing asset since 2010, the Nasdaq. The Nasdaq is down 99.9% in relative terms, and it's at key resistance too. The last 3 years have been all about ETH. That has outperformed the Nasdaq by 90% since then. And that Nasdaq ETH ratio has put on the DeMark weekly 913.9, which suggests a full reversal. ETH should outperform by another 90% over the next few years. So Raoul Pal is obviously very bullish on Ethereum. The support should get taken out in due course, for the Nasdaq that is. And ETH is also breaking out versus Bitcoin and is leading Bitcoin as well. This is being driven by the superior current network effects and network activity. He says, sure, other tokens will outperform ETH, but crypto overall will outperform all other assets, in his view. His hunch is that the market is caught underweight, as it is in equities too, and the path of pain is higher, but that is just a short-term thought. Long-term is clear, and that long-term trajectory is going to be up. The news of today, August 2nd, is that the Nomad bridge was drained of nearly $200 million in an exploit. So the cross-chain token bridge Nomad was exploited on Monday, with attackers draining the protocol of virtually all of its funds. The total value of the crypto lost to the attack neared $200 million. Nomad, like other cross-chain bridges, allows users to send and receive tokens between different blockchains. Monday's attack is the latest in a highly publicized incident, which has drawn the security of cross-chain bridges into question. It is incredibly difficult to build a cross-chain bridge which is secure. Nomad have acknowledged the exploit in a statement and said they are working to recover the funds around the clock. The bridges typically work by locking up tokens in a smart contract on one chain and then reissuing those tokens in a wrapped form on another chain. If the smart contracts, where the tokens are initially deposited, get sabotaged, which is what happened in Nomad's case, then the wrapped tokens are no longer backed by anything, and this renders them worthless. And it says somewhere else, a recent update to the smart contracts made it easier for people to spoof transactions, and this meant the users were able to withdraw money from the Nomad bridge that didn't actually belong to them. So this is pretty bad. You can see the amount that was drained. This is quite nasty. All right, let's take a look at the charts. So Dixie, the dollar, still in this sort of near-term downtrend. It is possibly going to catch a bounce off of this area of support here somewhere. So we'll keep an eye on that. As you know, I'm looking for a lower high to form and then a true breakdown. Bond yields coming off strong. Look at this. So does this tell us we've seen peak inflation? It at least tells us that the bond market is pricing in that the Fed is not going to continue to hike rates, and that potentially we have seen the last one of those. It also tells us to be open to recession worries, but we kind of already know that because we have a confirmed recession following the GDP print last Thursday. Everything is apparently cooling off at the moment. We've got Bitcoin. Look at this. This is strange price action from Bitcoin, to be honest. I'm not really sure what we're witnessing here. I'm going to continue to push this trade because until we at least lose 20,700-ish, I'm not too concerned about that. A new fresh low would obviously be a change in structure, and then at that point it would be difficult to justify saying that this long is still okay. But for now, I think it is, so I'll continue to see what can come of this. Ethereum is relatively stronger, but still it needs to catch a bounce pretty soon, doesn't it? It needs to do some tennis ball action here, not turn into an egg splat. So again, long and strong, but becoming increasingly worried, and MATIC is the exact same story. So we've got just a higher high here. It means it's probably taken the liquidity for these short stops that are above this point. So where does it go from here? I'm not really sure, but again, I'll continue to push that trade as well. Oil has formed its swing high pattern here with these three candles, so this could be a short, but it's still just not interesting to me. I think I'm going to wait until we break this and then go long on the trend line break, but I wouldn't be surprised if we get a little bit more of a flush down to this $85 region. But I think if a trend line break, if it occurs down here, in fact I will mark it with this, would be a long opportunity from me. Gold still pushing up, still looks quite strong, doesn't it? So happy days. Not much to say apart from long and strong. We have to be open at the end of this week to a drop into a half cycle low before we can continue. So just something to be aware of. The exact same thing is true of silver. It looks like we're getting this breakout retest, so looking for a resumption off this. But again, have to be open to only a couple more green candles before we can get a drop into a half cycle low. And the silver miners are still continuing to push up, so happy days, no problem there. JD Sports, I've got fed up with this. I'm out just above break even, as you can see. I said I was going to be long and strong. I said I was going to push this trade, but I don't want to hold this anymore because it's not behaving how I want to see it behave. I have this thing where if I take a trade and it doesn't do exactly what I think it's going to do immediately, then I was wrong. So although I could continue to hold this and it could continue to chop sideways and do nothing, it could chop sideways and break down and then I'd have to pay a stop, or it could continue and do this for a while and then go up. But either way, this is not strength for me. The reason I was happy to buy this here initially was because this was a leader. This was forming a bottom and pushing higher. It was outperforming the stock index, right? But this is no longer outperformance, because if we look at the UKX, look, so it's now underperforming the index. Okay, there's just no reason, and this is the same if you look at any index really. I know that you can't really compare JD Sports to these other indexes, but this is suffering major underperformance now. So this is no longer a market leader. It was up to this point, and then if it had bounced immediately off and gone again, that would have also been fine. But this is now telling me that likely this is going to chop sideways for a while, or even come down and take this stop out. So I've gotten rid of this position and I'm no longer holding JD Sports. The UKX, however, I am still pushing this trade and I'll continue to do so. The same is true of the Nasdaq, continuing to push this trade, running into a little bit of resistance here for the Nasdaq and the S&P as well. So I think we're down 0.5% or something in the futures already today. So we'll see how that goes, but nothing wrong with a little bit of a pullback before going again. I wouldn't be surprised to see 4,400-ish, maybe a bit less. I wouldn't be surprised to see 43.5. So that's where I'm going to be targeting for now, anywhere up in this neighborhood, and I'll be more than happy to take some profit and go back to neutral, waiting for a decent entry to set up. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you haven't already, go over to Twitter and follow us there. And in the meantime, all the best from me. Take care. Cheers.